Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thank you very much for joining us. This recording is for Thursday, July 16th. So we got another bullish moving average cross for SPY. So the trend is looking up for SPY. Look at RSP, the equal weight S&P 500. It's still below a key moving average, the 200-day. QQQ continues to rise despite a slew of bearish candlestick reversal patterns. And we've got some Bollinger Band contractions to watch in some key ETFs. So we're going to start off with the S&P 500 SPDR SPY because I think it is the most important benchmark out there. I'm going to look at a different benchmark of the S&P 500, the equal weight S&P 500 ETF in a second here to show you how there is a performance differential working there, and that speaks to the broadness of the advance or lack thereof. But looking at SPY, which is driven, of course, by large caps, even more so now than, say, 10 years ago, 5 years ago, even 3 years ago, large caps are clearly driving SPY. But if we look at this chart here, we can see that the trend is up based on a number of moving averages. The red moving average is the 200-day moving average, and you can see we broke above it here in the latter part of May. We tested it a couple times and are holding above it now. So we're above the 200-day. That's definitely a big +1. And then you can see we have a 5-day moving average, and that is the pink line, and it moved above the 200-day in late May as well and is holding. And I really like to smooth out prices by at least a 5-day moving average and using the 200-day because that eliminates a lot of whipsaws. Because you can see here we closed below the 200-day twice, but the 5-day did not come near the 200-day either time. Well, it came near, but it didn't close below. So you didn't get those whipsaws there. So you're above the 200-day, the 5 days above the 200-day, and then we get to the longer spread, so to speak. There's the 20-day in green, and it has moved above the 200-day, so that's bullish. And then, of course, the slowest of the three smaller moving averages, shorter moving averages, is the 50-day. So again, we got the 5-day, the 20-day, and the 50-day, and the 50-day is the slowest of the three. It's got the most time periods, of course. And you can see it has finally moved above the 200-day for the fabled golden cross. Now, personally, that's a bit too much of a lagging signal for me. And my favorite pair is this 5-day, 200-day cross, which has been active since May. Now, if we look on the price chart and look at price action on what's been happening, you got these big moves up, sharp pullback, big move up, sharp pullback, big move up, consolidation for 2 weeks or so, and then a breakout. And you can see that consolidation a little better if I draw some lines, and they don't match up perfect, but it's a consolidation, and you break out. And then we got this move. It's not a 52-week high up here, but you can see we've clearly consolidated after that big move up, and we've broken out of that consolidation. And I think as long as we hold 310, that triangle pennant breakout is bullish until proven otherwise. You close below 310 and then you're getting cold feet and you have to reevaluate. But the bottom line is the longer term, we're above the key moving averages, the 200-day, 5 days above the 200-day, and shorter term, we got this pennant breakout working and holding. Wedge type consolidation is forming. And if you break down there, that's going to be bearish. And then if you look at IWM, you can see it's even weaker. By the way, the red arrows are pointing out a bearish engulfing, a dark cloud pattern, and a bearish engulfing there for SPY. But we really didn't get follow through to those candlestick reversals. We stabilized right after those reversals. And in order to get follow through, you need to have to get a break below that wedge line for IWM. But we don't have that right now. So I would say definitely for SPY, the cup is half full above that 40-week moving average. Yeah, the evidence is more mixed for RSB and IWM, But as I'm going to show later, we've got some Bollinger Band contractions going on here, and that could lead to an upside breakout that we need to watch out for. Now, before we look at these Bollinger Band contractions, I want to focus on QQQ and a slew of bearish candlestick reversal patterns that formed in April, May, June, and now July. And so far, not one of them has led to much weakness. And what basically is happening is the bigger uptrend is prevailing. And I think in general, you should ignore bearish candlestick reversals above the 200-day moving average. And you can see QQQ moved above its 200-day there in April. And the first bearish candlestick was a meeting lines pattern here, where you had the open and strong close, and then you had an open way up here and a close near that prior close. So those lines met. But we didn't get any follow through to the downside. And instead, QQQ continued higher. Now, I've just marked the bearish engulfing patterns here. There's one, there's two, there is an evening star pattern, there is an evening star pattern, and there is a bearish engulfing. And if I really want to look hard, I could see a hanging man there, another hanging man there. You could see a shooting star here, another hanging man. So if you have a bias, you can see whatever you want out there. But the point is that bigger uptrend carries a much bigger influence on price action than a candlestick reversal. A candlestick reversal is a 1 to 2 week pattern at best. But when you're above a 200-day, and that 200-day is turning, well, the 200-day is turning up in late April, and the 50 days above the 200-day in the latter part of May. So you're clearly in a long-term uptrend. And that's when we should ignore these bearish candlestick reversal patterns and instead focus on potentially bullish patterns. There was a flag here, and we got the flag breakout. You were short-term oversold after this decline, and then you got a bounce. So the main point is QQQ is leading. The 80-some stocks in QQQ account for like 40% of the S&P 500. So that's a big bullish influence on the S&P 500. And we've got the bearish engulfing on Monday, but we didn't get any follow through on Tuesday. We firmed, in fact, and looking to open a little stronger today on Wednesday. So the uptrend is clearly intact for QQQ. So just to note that this is trendinvestorpro.com. This is my website where I cover market timing and trend momentum strategies for mostly ETFs. And subscribers that are also members of StockCharts can subscribe and get access to the master ETF chart list, as well as the essential breadth indicator chart list. And if you look at the analysis page, you can see the premium articles. There are a few free articles down there, but every week I have a timing model and a trend model, and that is updated. And right now it's mixed because we're seeing strength in large caps. The NASDAQ 100 trend model, breadth model is bullish, but the S&P 500 breadth model is bearish because participation has not been that broad yet. So now let's move on to the Bollinger Band contraction because there are a number of contractions out there. So a couple things. First, John Bollinger, creator of Bollinger Bands, he theorized that a volatility contraction is followed by a volatility expansion. And so when the Bollinger Bands narrow, that means you've had a volatility contraction. And you can see that the Bollinger Bands clearly have narrowed. The pink area chart, pink area there shows the Bollinger Bands narrowing. And then you can see I've got Bollinger Band width down there in the indicator window, and it is below 10. And we can see the last time it was below 10 was in late February. Now, one thing about Bollinger Bands is they don't give you any directional clues. It's just a volatility measure. It shows you when volatility is expanding or contracting. You can see here in February when we had the sharp decline, the Bollinger Bands widened there as we had the bandwidth widening and we had a volatility expansion. So they don't give you any directional clues, and for that you have to pay attention to the price chart. And I'll get into that in a little more detail in a second here. But Bollinger Bands are basically based on a 20-day moving average, which is the dotted line in the middle. And then I've got it set at 20,2. And so that means it's two of these standard deviation values. This is a 20-day standard deviation, 1.64. So you take two of those values, you add it to the 20-day moving average, and you get the upper band. You subtract it from the 20-day moving average, and you get the lower band. And you can see as volatility falls, these tend to contract, the Bollinger Bands. And so we have a Bollinger Band contraction, which could lead to a break up or a break down in RSP in a number of ETFs. So let's look at how some of the chart setups are working as far as a directional bias is concerned. So here's RSP again with some markups on the chart. Now, what I was focusing on the previous week in late June and in early July was the failure near the 200-day. You moved above and below, and this rising wedge. And it looked like we were breaking down here. But you can also see that there's a clear support zone here. So classic technical analysis teaches us that broken resistance turns into support. And you can see it turned into support in mid-June and here in mid-July 3 times. We can also see that you had a big advance and a pullback that retraced 50 to 62%. So that's normal for a pullback. So in that sense, it looks like an area that could give way to a bullish reversal. In addition, if you look at RSI, you can see it's firming in the 40 to 50 zone like it did in May and in late June and July, and it just turned up. And then if we look at Stoch RSI, which is the stochastic oscillator applied to RSI, it's like the momentum of momentum, you can see we got a pop there above 0.80. So if we get a breakout here, that's going to argue for a continuation higher, and that would negate the wedge, I think, and put the bulls back in the driver's seat, and we could be even back above the 200-day moving average. So the equal weight S&P 500 is shaping up bullish. Now, if it fails to hold the breakout and moves below support there, we're back in bear mode. So you can see we're at a real moment of truth as things narrow below the 200-day and above the support zone. And the direction of the break is what we're watching for. So that concludes this edition of Next Level Charting. Thank you very much for tuning in. If you'd like to know more, please visit our website, trendinvestorpro.com. Thanks for tuning in again, and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.